Welcome back to the channel, guys. I just wanted to check in, give you guys a quick update on the market conditions. Right now, we're looking at the Ethereum chart. As we can see, there are simultaneous descending triangles happening within the Ethereum chart. Each one has more than 3 points of contact on each side. So there is a good chance that either one can be validated. In the orange triangle, in the smaller, more compressed symmetrical triangle, we are looking at a breakout very soon as the price continues to get squeezed towards the apex. On the upside, we're looking at around 2,941 to be exact. On the lower side, on the downside, if we see further breakdown in price, down to around $1,049. In the blue symmetrical triangle, and this descending triangle, the upward target would be 3,817, and on the downside would be $909. Descending triangles are most likely indicative of further downside momentum, which is likely to continue or become even stronger. As we can see in one of the previous videos, we were tracking this ascending triangle with a target of 2561, and we hit that right on the nose. With these ones, I do think that this is not a guarantee that we're going to hit these targets, but that's sort of the what the technical analysis is showing currently. Ethereum has been operating in this long-term range since 2020. We broke above the range during the parabolic run of Bitcoin and are making our way back into this range again. So, where we go from here, it's hard to say, but I do think that this is important information for you guys to know. And Bitcoin is still in its own macro-sized descending triangle. We have an upward target of $60,000 and $411. For the downside, we're looking at around 18,700. So we still have a little bit of ways to go here before we get into the apex of this descending triangle, but something to keep an eye on. Again, this is on the macro. This is on the daily chart. As we can see, Bitcoin has been bouncing around inside of this symmetrical triangle for some time. VeChain has actually broken below its long-standing trend line that it has been operating in for quite some time, all the way back to August of 2020. The price now sits at around 6 cents or 6.9 cents. VeChain coming in at a really good deal right now, but it's hard to say whether or not we're going to. If Bitcoin and Ethereum continue into the downside, we may see targets of VeChain around 4 cents, all the way down to 1 cent. Obviously, with support coming in at around 2.7 cents and 3.5 cents along the way. So that's what's happening right now in the markets. Even the hyped up Shiba Inu coin is also correcting back down to levels that it had seen back in early June. So the markets are all taking a pretty big hit right now, and I do think a lot of this is related to a lot of FUD, and there is a FUD campaign going on in the in the crypto space by the FCA. So I wanted to share this article with you guys. The Financial Conduct Authority will launch a marketing campaign warning young people about the risks of investing in cryptocurrencies. The FCA is investing $15 million into warning young people about the risks of cryptocurrency investing. The financial regulator CEO said that young crypto holders are prone to behaving less rationally and more emotionally. The FCA has issued several warnings about cryptocurrencies in the past, recently targeting Binance. So an entire campaign solely focused on warning young investors about the risks of investing in cryptocurrency. And then, what's pretty interesting is that, we are currently witnessing record outflows from Canada's biggest Bitcoin fund, which has seen Bitcoin reserves drop by 50%. A Canada-based Bitcoin fund operated by 3iQ Corporation has witnessed a dramatic decline in its Bitcoin reserves since June. Literally named the Bitcoin Fund, the closed-end investment product was holding around 24,000 Bitcoin in its vaults in early June. However, as the monthly session progressed, the reserves first dropped to below 16,000 Bitcoin in a dramatic straight line decline. Later, another massive withdrawal pushed the Bitcoin Fund's BTC reserves to around 13,000 BTC, according to on-chain data from South Korea-based analytics firm CryptoQuant. However, the withdrawals from the QBTC fund across June coincided with an inflow spike in 3iQ's exchange-traded fund ETF, called 3iQ CoinShares Bitcoin ETF. In detail, the Canadian ETF attracted inflows of around 2,088 Bitcoin in June against the QBTC outflows of around 10,000 BTC in the same month. ByteTree CIO Charlie Morris noted that 3iQ allowed its clients to convert their QBTC units into 3iQ CoinShares in the ETF. He added that the growth of the crypto ETFs across major stock exchanges, which allows redemptions and withdrawals, prompted investors to reduce their exposure in the closed-ended fund. So a lesser Bitcoin exposure nonetheless. In comparison, 3iQ's top rival, the New York-based Grayscale Bitcoin Trust, did not witness declines in its BTC reserves. Grayscale Investments has closed GBTC since February, citing administrative purposes. The closed-end fund does not allow redemptions and withdrawals. Additionally, data collected by ByteTree Asset Management shows that the 90-day inflow to the United States and Canada-based Bitcoin funds has dropped to 12,794 Bitcoin compared to the 191 Bitcoin in January. That represents a 93.3% decline. So the Fed angle, institutional investors reducing their exposure in Bitcoin funds, coincides with the Federal Reserve's hawkish signals at the end of June's Federal Open Market Committee meeting. In detail, the U.S. Central Bank said mid-June that it could hike interest rates by the end of 2023 to contain prevailing inflationary pressures. It referred to the U.S. Consumer Price Index, or the CPI, a gauge that measures inflation that surged 0.6% in May 2021 to reach a three-decade high of 4.5%. The CPI climbed another 0.9% in June to reach 5.4% at its fastest pace in the last 13 years. As we can see by this chart, the increase in inflation is quite substantial. Since the Fed's outlook, Bitcoin has dropped below 32,000. However, the flagship cryptocurrency has mostly remained inside the 30,000 to 34,000 price range, suggesting a mixed outlook among retail and institutional investors about the cryptocurrency's next directional bias. The bias conflict emerges despite popular narratives that pose Bitcoin as an ultimate edge against rising consumer prices. The record goes like this. Unlike the US dollar or other fiat currencies, Bitcoin comes with a limited supply of 21 million tokens, which makes it scarcer than inflationary currency and in turn more valuable in the long run. But Bitcoin has reacted negatively to rising inflation in the previous months, prompting critics to question its safe haven narrative, at least in the short term. So, I do think that the threat of rising inflation is a major concern right now. And one of the catalysts beyond the FUD campaign being launched by the Fed to scare investors away from cryptocurrency, I just think that this is a hot cocktail for a fear-based market right now. But narratives can quickly change. We saw it in 2017, and we've seen it in previous bull markets. The markets are going to just get whacked with a bunch of FUD because the central banks are scared, and they're afraid of cryptocurrencies consuming all of the investment revenue. I think even while the narrative appears bearish, I will say that whales are continuing to accumulate, and it is one of the major reasons why the market has not just dumped completely based on all the FUD that's going on out there. So it is something to consider. It is a good idea to continue to watch the on-chain metrics for the current outflows for Bitcoin. And, right now we're experiencing a large number of Bitcoin being transferred to cold storage wallets. So concern as Uniswap-backed DeFi education fund dumps $10 million worth of Uni. So the recently formed DeFi education fund has come under fire for abruptly announcing it had liquidated half of the 1 million Uni tokens donated to it through Uni governance. The controversial Uniswap funded DeFi education fund has liquidated half of its donated funding into stablecoins, attracting condemnation from many in the crypto community. On June 12th, the fund tweeted that it was selling 500,000 Uni to Genesis Trading for 10.2 million USDC in an over-the-counter trade, despite the Uniswap proposal for the fund indicating that it would liquidate the 1 million Uni over 4 to 5 years. In May, the student organization Harvard Law Blockchain and FinTech Initiative launched a governance proposal advocating for the creation of the fund and the allocation of 1 million Uni, worth roughly $18 million at current prices, to the entity to support educational initiatives and policy lobbying for decentralized finance sector. At the start of this month, the proposal was passed and the Uni tokens were transferred to the fund. The incident has reignited concerns regarding the centralization of Uniswap's governance process and called into question the transparency and motives of the fund. So this is not good for Uniswap, and I'll tell you why. Because Uniswap is just it's supposed to be a decentralized DEX, and it just seems like the whales have full control over the governance of the token and the DEX itself, and a lot of the liquidity is just being sort of ripped out from the DEX, right out from under its feet, and all of its investors. So not a good look. And hopefully, with on-chain voting and stuff like that, the Uniswap community can, pass some protocols, put some protocols in place so this doesn't happen again in the future. Uniswap again, coming out in the news. Uniswap V3 launches optimistic Ethereum layer 2 scaling in alpha. Long-awaited layer 2 scaling is finally being launched on Uniswap V3. albeit a limited format initially. The long-awaited layer 2 scaling solution upgrade for Uniswap has finally been spotted in the wild with the launch of version 3 on optimistic Ethereum. In a post on July 13th, the world's most popular decentralized exchange stated that it was pleased to finally announce the alpha launch of Uniswap V3 on the optimistic Ethereum mainnet. The alpha launch is a limited version of the full system, which helps developers deploy the system gradually and address any issues that may arise. The blog post elaborated, "Please treat this as an early alpha product. Optimistic Ethereum is a complex layer 2 scaling solution still in need of rigorous battle testing." The DEX warned of potential downtime and stated that withdrawals from the second layer will take 7 days. It also stated that there are limited assets at launch, namely Ethereum, USDC, Wrapped Bitcoin, DAI, and SNX, but more will be added in the coming days and weeks. Additionally, it appears that Uniswap has also launched a decentralized DEX on VeChain. So it's called VeChain. And the Uniswap so VeChain is the first DEX on the VeChain Thor platform, and it's called VeChain 2. VeChain 2 utilizes the brand new Sync 2 technology, which enables users to access the DEX seamlessly, further paving the way for DeFi on VeChain. So this is big news for VeChain as they begin to enhance their interoperability with other platforms and protocols. So VeChain continuing their growth and momentum. In the ADA world, Charles Hoskinson posted on Twitter just hours ago that he said he has been busy. And this is the release of a new research paper, which is a formally verified crypto-backed pegged algorithmic stablecoin. So this is one of the main projects that are slated to be launched on Cardano, and which will have an algorithmic pegged stablecoin for the Cardano platform. A lot of mixed messages on Twitter for Charles Hoskinson, but with all of these haters sort of throwing FUD at him, I will say that there is over 72% of Cardano currently being staked, which represents a huge commitment from its community. And I do believe is a representation of its recent stability in the crypto markets. So ADA has been looking very stable in spite of the rest of the bloody streets that have been across the crypto market. So yeah, and then finally, and we'll just continue with the theme of DEXs today. OneInch Foundation launches a $3 million DeFi developer grant program. So OneInch Foundation, the nonprofit organization of OneInch Decentralized Exchange Aggregator, has earmarked $3 million to fund a new protocol upgrades as part of a giant program targeting developers. Over the next 12 months, OneInch Foundation will provide grants for projects in the following categories: network development, community development, and research and analysis. The network development category targets aggregation products, automated market makers, wallets, layer 2 protocols, and integrations involving the OneInch API. For community development, eligible projects include educational materials, local gatherings, and hackathons. In the research and analysis category, OneInch Foundation seeks to fund projects around data analysis and research. So I do not expect that this development will immediately impact the price of OneInch token, but I do think that it will enhance its potential, within the crypto scene. And I think that OneInch will continue to evolve to meet the needs of the market and represents one of the stronger projects in the crypto space. So OneInch is currently trading at around $2.34, and I think it's probably one of those coins that will probably be around for a while. So definitely a decent project. And I just wanted to say that the Shiba Swap platform is functioning really well, with over $1.7 billion total value locked on the Shiba Swap platform. Shiba Swap is definitely gaining momentum as the community continues to grow. Even though the price has seen some downside recently, the Shiba Swap community is just as excited as it has been since the beginning. They are launching a virtual party on July 20th. And you can find that link by visiting Twitter. If you go to Shitoshi's Shitoshi Kusama is his name. It's a little hard to say that, but so there is going to be a virtual party for all of the SHIB community. And if you are a SHIB holder and a SHIB community member or SHIB army member, I would say probably a good idea to attend that party, since I'm sure they'll be releasing some information at that party. So I also wanted to point out that the Cardano Foundation partners Rwanda-based NGO to create ADA crypto charity platform. So crypto charity will ensure better compliance and transparency. And so according to a statement released by Save the Children in Rwanda, it has entered into an agreement with Cardano that has installed a payment gateway that will enable ADA donations to come directly into the project without any intermediaries. Once the NGO receives the fund in its kitty, it will be invested in a myriad of African-based social enterprises with a proven impact on children, families, or youth. Within hours of the launch of the system, it received donations of 22,000 ADA, worth nearly $30,000. Save the country's country director in Rwanda, Maggie Cord, said that cryptocurrency and blockchain technology could help school children. So Cardano testing its financial payment systems in the nonprofit space. So I do believe that this is probably the start of a bigger, evolution of user adoption in financial payment systems using the Cardano platform. With just around 3 or 4 weeks, 5 weeks away from full smart contract functionality, this is it's good to see that Cardano is testing out their platform and their financial payment systems. And I do believe that, considering the fact that Africa is in such dire need of a decentralized financial payment system, Cardano is just in the right place at the right time, intentionally, obviously. Cardano also has, strong partnerships across the space. Some very well known, others not so much. In a recent video posted by BitBoy Crypto on YouTube, he pointed out this privilege contract. So, I thought it was worthwhile for me to mention this here for all of those Cardano supporters out there. Cooperation with the European Union and Privilege. There is currently collaborating with an EU institution to explore use cases for blockchain and distributed ledger technologies. The working group is called Privilege, and it has received funding from the European Union's Innovation Program. The research is to focus in particular on European data protection. Based on Cardano, it is to be examined what advantages blockchain technology brings for data protection. The newly founded consortium members include IBM, Eindhoven University of Technology, the University of Salerno, the University of Edinburgh, and IOHK. You can find this more details on this project at the on the Privilege website. If you type in Horizon Project, and IOHK is listed there, and they are talking about digital identification across the European Union. Cardano also has partnerships with Georgia. Cardano signed a memorandum of understanding with the state of Georgia in June. This was confirmed and intensified in 2020 during a meeting at the World Economic Forum in Davos between the former Georgian Prime Minister and Charles Hoskinson. The partnership focuses on using the Cardano blockchain to map the public administration and large parts of Georgia's education system. Additionally, Cardano works with PricewaterhouseCoopers, and this is one of the biggest partners for VeChain, and PricewaterhouseCoopers is a global firm and is, nicknamed one of the big four auditing firms, and is therefore one of the leading firms in the field of corporate as well as tax consulting and auditing, along with KMPG, Ernst & Young, and Deloitte. By partnering with such an influential and networked firm, Cardano gains additional legitimacy and can expand its network effect. This gives the project strong support for global adoption and use of ADA. Fundamentally, then, the partner network in particular is an important factor for Cardano's development. From our perspective, this primarily offers opportunities, so our Cardano forecast is positive on this point. So Cardano making big moves across Fortune 500 companies and governments. And I do think that is going to paint a positive outlook for Cardano across the next few years, especially as crypto continues to evolve. Taking a quick look at the ADA charts, we've got ADA BTC looking very strong at 3,874 Satoshis. And on the ADA USD chart, we have seen further downside at $1.21. However, on the macro scale, it's not really clear which way this is going to go. This range has been a pretty strong support for ADA over the past, since early February. So even though, we did see all-time highs up near the 243 range, we are just touching back down on a stable support line that has been there all this time. So hopefully, especially with as many ADA that is currently staked, hopefully we will find continued support here and further upside. If we do see further downside, though, the lower this support line at the $4 mark will probably be the lower targets if we continue to go down from there. So that's all I got for you guys today. Hope you guys are all having a lovely week, and be safe and have some fun.